Good morning, everyone. Well, I'm hoping and anticipating this market could really get out of this trading range here. Looks like the futures have a little peak above the prior high, and next resistance isn't far off. There's an unfilled gap here in the futures. I know it's hard to see. I've got this scrunched up, but I guess I can do this. And you can see that it's actually there. That's where it started to move lower. So it shouldn't be much of a resistance point, but it is a focal point that others are going to be aware of course, and take note of. And then you've got this little high up there. So we've had this long period of consolidation. And I've been talking about this now for 2 weeks, pretty much, at least, about what this market is waiting for to push higher. And we know about all the uncertainty, Corona, China, spending money that we don't have, trillions of dollars, so on and so forth. And anyway, all of that nonsense aside, we look at things technically as chart-based investors and traders. When we see consolidation at resistance and we see red bars like that being ignored, especially topping tail range expansion bars, it says it's going up. And consolidations like that, it says it's going to go up because buyers are there on the dip. And so what has been a little unusual is the fact that, reversals like this that come down as hard as they do, and then buyers just step up right there. And so it's like everyone's afraid to miss the move, but everyone's afraid to death that the move is going to end, I guess, quickly and get smashed. And then whatever institutions are shorting, looking to this thing to profit on the way down, they have to average in. Um, they run for cover on every little sign of strength. So we have it. It's this choppy sideways consolidation. So there's a little bit of strength that we're seeing here pre-market where it's just inching over this high. The question is, can it keep going? So looking at the hourly chart as we always do, there's the sideways move. And when I talk about these sideways moves, that is applicable to any time frame that you look at. Meaning we interpret it the same way. Larger time frames have larger implications. So when we see a sideways move like that at resistance, resistance, sideways move, red bars ignored, you expect to have, once it gets going, a meaningful move. But rather than we just keep getting this chop. So wide range bottoming tail bars, the end of last week, buyers stepped up on the dip again. These are pretty big sell-offs, and then coming all the way back. Pretty amazing. In any event, through all of that back and forth, we look at the weekly charts, and what did we end last week? Basically an inside bar, a lot of running in place. And that's what's going on here in all markets, pretty much, is running in place. We're going to get some blast off here, maybe. Anyway, there's the resistance up ahead. Maybe it makes new all-time highs. I'll look at the other markets, but as you can see, the internals here are just really out of whack. We've looked at this as well over the last couple of weeks, where this sideways chop, where the sentiment got to a bearish extreme. And while I didn't drag the market down because breadth has been anemic and just a few stocks dragging this market higher, you haven't had that broad participation. All that bullish option buying hasn't resulted in the market moving higher in a meaningful way. One step forward, two steps back, so on and so forth. And we'll see if that changes this week. But you see the breadth deteriorated a little bit more with this little downward move there, with that little blip to the downside Thursday and Friday that the prices recovered from. So the option traders stepped up again at the end of the week, anticipating, I guess, maybe the blow off that might come. We shall see. That's what we do. It seems like every day, waiting to see if this thing's going to move out of a range. So looking at the other markets, right, NASDAQ futures are up here pushing up toward the old all-time highs. And you can see very clearly each time they get there, the sellers come in aggressively and dump. And, pull back. This pullback broke through the prior swing low, and now it's retraced almost 100%, and it looks like it's going to get there. So again, consolidation at resistance, bottoming tail bar, blipped up. So short term, this line right here on the futures, it shouldn't even get there. And so when we see resting periods, we're not supposed to get these big pullbacks, because these momentum moves that create these price voids and then create support areas tell us that there's strong demand. So what should happen is we see the wide range bar. It's supposed to consolidate and then continue to move higher. So that's how we interpret the price action, because historically that's what it does when things are like clicking the way they're supposed to. So if we should see prices come all the way back down below the wide range bar, we're back into, this schizoid kind of price action. That's not what's supposed to happen when we have this pattern of sideways dip, right back up, sideways, so on and so forth. But resistance is right up here. So it doesn't have that far to run before the institutions say, hey, here's the next opportunity to sell. And so what we don't know is, through all of this sideways price action, I'm just trying to grab this here. Let me just duplicate it and drag it up here. Whether they'll sell here and we'll come back down to the trading range, or, right, there's always an or. So meaning, or what else could it do? All right, so we could make some assumptions. Rather than make assumptions, we think about scenarios. So coming up here, bottom of the range, top of the range, not a good place to be buying a breakout above the top of the range, since it moved from the bottom of the range. It could chop sideways at the top of the range, right? Bullish price action at resistance. That would be a good thing. And if we were to get little bottoming tail bars like this, where it may be poked under a prior day's low at the top of the range, that's bullish price action. That looks good. It could get a reversal and come back down to the bottom of the range. Usually at the third time, though, it's not going to get a fourth chance. So that's where we're at. Upside at this point is somewhat limited. And a push above that probably would be a bull trap in the short term. So we'll keep that in mind. And well, let's do SPX before we move on. See where the spiders are at here. 328.50-ish. As the futures just poking above the top of the range there. It's a tricky situation. Meaning, okay, another sideways chop. It's a tighter consolidation, which is more supportive of thinking that it could keep going, versus the NASDAQ futures, or the Qs, that went from the bottom of the range to the top of the range. So ideally, and I wrote about this in the letter, ideally after this wide range bottoming tail bar, we'd have more of a consolidation day today, kind of building up, as we've looked at here on the other charts, building up some support at resistance that could then be a better pattern for prices to blast off to the upside. So for SPX levels, if we get the move to the upside this morning, like it's already made a run, right? You can see here, it's already made its run on Friday. Incredible, coming all the way back after that drop, coming all the way back. So getting above here, and maybe it might get sold into immediately. We've seen some of that. But if we think about the 10 o'clock reversal period, maybe at that point, if it does start coming back in, then credit spreads, let's just see if there's something above 3,300, I think would make sense. You've got this, let's push this over here. 3,300. This gap is higher, way above there. But I think above 3,300 after seeing some breakout failure, some type of price action where it tries to push up and gets slammed back down again to where buyers have some shock, meaning, the move up failed and it comes back in, it creates that uncertainty to go higher. And then above that level of the shakeout or the shock would be where I would think an SPX call spread would be safe. Now, on the put side, since there's a void, you really don't have any safe levels until you get way down here because there's no support. So the opposite type of price action, meaning it tries to go down at some point and then creates a downside shakeout or W bottom, something that creates new support somewhere within the range there, would then give us some safe levels down below. YM has been the laggard. No, well, amongst the laggard, the Russell has also been a laggard in the transports too. But as you can see with the Dow futures, they're nowhere near the top of the range. However, as it pokes down, buyers step up there as well. And it's similar price action there on the hourly where it ran up there. So buyers on the dip, it's got resistance here. This one, unless it can clear these highs, for even as an intraday trade, it just doesn't make sense to get involved with it. So it needs to prove itself by clearing some resistance there. So limited move before hitting those prior highs. And not very excited about the arrangement of this price action here this morning. Russell just chop, chop, chop. And maybe later this week, was my thought over the weekend, could this finally be the week where it gets out of this range here? This as well got bought on the dip on Friday, and not enough to push it above the open and turn the candle green, but it just continues to go sideways here. Sellers stepping up on strength, buyers stepping up on weakness, and the chop just continues. So as we wait to see whether these markets are ready to move up or down, just move one way or the other. It's kind of frustrating, all of these false stops and starts, but as we say, it is what it is. Bonds coming in a bit as the markets show a little strength, normal. It's up at resistance there. And you can see to the left, we've been looking at that area there for a while, and now it's reached it, and sellers step up. Pretty simple. Look to the left, see the resistance. We'll see how far it pulls back. Oil giving it back a little bit here. Just had that pop above the highs, and we've got a break. Right? We took out these prior pivot lows, so it's rolled over here. And inside bars, so weakness is followed by, I'm not so sure. We want to keep selling. And so there's uncertainty everywhere that we look, except for gold. So that is stalled. Right? It was stalling here and popped higher. And now we've got this, red bar going on here today. But red bars within strong uptrends historically don't create much of a pullback. Now that is a little extended. And so we'll see if it begins to pull back a little bit. And I suspect, we'll see what the politicians divvy up for themselves and delve out a little bit to those that are in need. That they're going to have their favorite pork things. I think it's just terrible. They talk about deficits for how long? Decades now, and all of a sudden shell out $3 trillion and talk about another $1 to 3 trillion, and beyond my comprehension. But anyway, so I think the more they spend, the more that's supportive of gold. And at some point, all of that comes home to roost and will create problems. And silver, chopping around here, but it's got plenty of room, right? So little pullbacks there, but plenty of room to continue to go higher. So when, prices move like they have here, and they've reached some resistance area and they're a little extended, the next thought process is, well, it needs a rest. So is the rest sideways chop, which is going on here, which is bullish, or is a rest more of a pullback type of situation, which it hasn't done yet? So at this point, this big whippy candle there creates a lot of uncertainty. It's calming down a little bit. So, from this time frame, message, just leave it alone and let it calm down. The dollar beginning to stabilize here, so that may have some effect as well on gold and oil. So just keep that in mind, that it is beginning to stabilize at this point. And so different things to keep an eye on. And the more uncertainty and chop there is, more things we keep an eye on to kind of figure out when things are going to move one way or another versus when they're just trending in one direction in multiple time frames. That makes it relatively easy, which we don't have right now. So there you go. All yours, Dan.
All right, thanks. Good morning. Yeah, I just typed there they've already shelled out 5 trillion, and I made that point in the weekend advisory letters that it's a record. They have spent more on stimulus than the quarterly GDP. Think about that. GDP, goods and services produced in the entire country, and we've given it away. Yeah, these are interesting times for sure. All right, all our opens are fine. Codex here. We got into long on Friday, and I've already sent out alerts that we've my target, just eyeballing it was 26 to 28. So we're out of 2/3 already in this nice pop, and we'll 30-minute low for the back third. Maybe it pushes up to 30 or who knows. Anthony's asking about Zoom and Stamp. Zoom, that's a big fat nothing. It's in a, it's strong. It's in an uptrend on the weekly, but that was a bear engulfing. And there's no setup there. It's just in a trading range. So that one, I'm not crazy about. Stamp, hey, that was a nice 1, 2, 3. That triggered on Friday. So I like this one for the bullish side a lot better than the Zoom. But yeah, with the markets gapping up here, I got spiders in the upper right. We mentioned in the weekend letters, as Greg just did pre-market, that it looks like it wants to go higher. Despite all the bearishness, we're technical traders. Your long put was exercised. What, Derek? What was the expiration? But Derek, if you are long a put, yes, it will be auto exercised if it's closes 1 cent in the money at 4 p.m. price. But if it expires next week, no, you're the one that controls early assignment. You are. So we can talk about that later. I had Kook on my short watch list, remember from Friday? And that's the foreign Carnival cruise line. So yeah, cruise lines are still weak. Boeing, we are short this, so that's still weak. Jets was also weak. Microsoft, Yeah, somebody emailed me. There was crazy reversals. I was out Friday afternoon, but just crazy reversals all over the place, and this was one of them. I mean, look at this, folks. This was a nasty red, wide engulfing bar at the day's low, and then it closed above the open. And if you look at the spiders 15-minute chart, I mean, same thing. Look at this. You had a bullish retest and straight up into the close. It's nuts. Yeah, Microsoft, they're, Ballmer was on TV wanting to buy TikTok. Oliver's asking about Tesla, bearish for the day. Well, they aren't acquiring it yet, Ahmad. They're just talking about it. Let's see, Tesla. No, well, the daily, yeah, it was bearish, but now with the gap over all of this end of day consolidation, no, it looks like maybe a scalp. It looks like a scalp long over the pre-market high, maybe to 1470. And they were mentioning Barron's. I don't know, I didn't read it, but I think the oh, you know what? They made a very interesting point I did pick up on. They said Tesla's current value. Now I know this is kind of apples and oranges because a company's value is based on, future earnings and, expectations, this and that. But what I thought was a very interesting statistic is that the amount of cars that they're delivering today, this year, 2020, based on its shareholder price, valued each car at $750,000. Isn't that amazing? You know what that actually reminds me, Greg? I don't know if you remember this. I sure as heck do. When we were trading Krispy Kreme donuts, KKD, in the heyday when there was trading like an internet stock, when it topped out, the shareholder value was equating the value of every single store at $100 million. A little Krispy Kreme store, 100 million. And that was the top. All right, let's continue here. All right, Intel's not well, it is gapping up to resistance, but I didn't notice how whacked it got. I know it gapped down on earnings. So 30-minute high, this might be a put spread idea for the week. That had a wide range breakdown, gapped up. I saw it when it's up here at 14 bucks, and now it's not. So I'm just going to delete that. Yeah, there's the Microsoft. Yeah, so somebody emailed me, I think it was Gertz in the room here over the weekend. And he said, hey, Dan, would this be a good put spread candidate? Selling the 200s, 195s for Friday, 60 cents. And I said, yep, I did. I said, yep, that's a nice reversal. Hey, Steve, welcome back. Yeah, I already looked at stamp for somebody else. Yeah, I mean, it's far from the 20, but yeah, it's a 1, 2, 3 continuation. So, I see some various dots here pre-market, which means it's not very liquid. But sure, you can keep that on the list. Someone's asking about space. We still have a half lot of a put spread, but now gapping up to 23.80. Yeah, day trade is acting well. Yeah. Yeah, maybe 10-minute high. Target, I don't know, 24.50 to 25 and a quarter. I don't know, but yeah, that's a bullish gap on the 15-minute chart. Sure. Maybe, but I mean, let's us look to add to it or put on a new one. Etsy is gapping up. I just don't like things far from the 20, 4 up bars. Moss, Steve, is better. It's more rested, so it's closer to support than Etsy. All right, let me continue here. Plug, I see it up pre-market, and then the daily is very sloppy. But the weekly is a buy setup. You know, came in kind of hard, but the weekly, if the daily can turn, I don't know, that's just not clean. But here's another strong one talking about stamp. Look at that. This is a 1, 2, 3. T-Doc. I missed that bar on Thursday. And then Friday, inside bar to all-time highs. That's a textbook 1, 2, 3. I'm going to put that in a window. BCC has earnings, 48 bucks. It's gapping up, no pattern. These are all earnings right here. I don't like the way you trade. HSBC. Gapping down, you're an ADR. I don't like those. Boeing, 170, 175. Sure. 170 is right there. I mean, I personally would like it over here, the 175s, but then you know the drill. You aren't going to get paid as much. But yeah, that's a bearish, controlled downtrend. Yeah, looks good. Relative weakness. SIBO had earnings, no pattern, you're gone. Costs, no pattern. These are all earnings. NBLX, 960. Maybe that turns into a day trade. No great pattern. Noble, weak sector. MPLX gap in the 19 bucks. I don't know, we'll come back to you. J, no pattern. Rambus, the old bus. No pattern. RS, we'll come back to you. TKR, no pattern. I can't tell where you're gapping, but hypothetically, let's say you were to gap up to 48.50 and take out a 10-minute high, then that would be interesting. So that's, I can't tell where you're gapping, so we'll come back to you. Cost, no pattern. L, bearish gap down. McGraw, you were asking about that pre-market. So that would be a call spread candidate. EQT. Yeah, it's a gap breakout. Yeah, 30-minute high maybe. Yeah, I'll put that in the bottom right here. Market's selling off here a little bit with the big gap up. McKesson gap in the resistance, no interest. CMS, it's worth watching. We'll come back. CLI, no pattern. GPN, there you go. There's a good gap. That's worth watching. Oh, look at my Clorox here too. So it gapped up and came in, and here's where it needs to hold. So what you would look